Okay, so you guys have asked me to look at October, November 2015. We'll look at those questions. You wanting to go through these two, accounting equation and the analysis of financial statements. You'll see the accounting equation is out of 24 and the analysis out of 15. Remember, with analysis, you're going to need those equations. So you know that one page in your textbook that has all the different equations. You need to make sure you study that going into the exam. Right, so question 3. There's it. The required wants us to create an answer that's in that format, so let's create it. Date, debit, credit, then you've got your assets equal your owner's equity plus your liabilities. Right, so you're asked to create something that looks like that for this question. Okay, so that's what you would start out with in your exam, is the format. Then we need to go to the question and we need to look at all these different transactions. Okay, question 3 is out of 24, marked 29 minutes. The following transactions pertain to AS. The entity is not registered as a VAT vendor. Does that help you? It does. Why? Don't need to work out VAT. Don't need to show input, don't have to show output. They do tell you that they're using the periodic system. So what do we call inventory with periodic? Do you guys remember? Purchases. So when you use the word inventory, it needs to be written as purchases. And purchases is an expense, not an asset. Okay. Number 2. The owner, D, took inventory valued at that for his personal use. Easy one. On the second, owner takes, you should be thinking about drawings. Drawings is debited always. What did they take? Inventory, which is purchases, bracket expense, decrease. The owner is taking inventory. So we've got 7,140 there. Drawings is going to affect owner's equity negatively, so minus 7,140, and you're also going to show plus 7,140. Okay, it's going up and it's going down for that particular transaction. Okay, is that one all right? Did you guys all get that right? No. Not?
No, but we saw where we went wrong.
Okay, so where did you go wrong? What was the problem? Okay, you can't. Drawings is drawings. Drawings will always be debited. Okay, that's the basic rule. The word drawings even has the DR. So you're not going to have anything other than drawings. Does it make sense? Okay.
Okay, I took inventory.
Yo, you can't.
That's where I actually took inventory and looked at it as my stock.
Correct. What account are you looking at? Purchases. Okay, you're not looking at inventory. Okay, purchases is an expense, so plus on the debit, minus on the credits. Makes sense? Okay, number 3. Received that from Rhodes in full settlement of his account. If you're receiving a payment, he's a debtor. Do you agree? That's important. That's revision. Okay, so number 3, debtors will decrease. No, you should write debtors R Rhodes or debtors J Rhodes or whatever it is. Okay, just identify who they are. Okay, so it's a debtor. It's decreasing. Bank will be increasing. Asset goes up, asset goes down. you're going to have the same thing here, plus and minus 2,400. Got that? 7. Purchase inventory on credit from North. If you're buying on credit, you're going to affect a liability, which is creditors.
Can we go back to
Number 3.
What about number 3?
okay, they received 2,200, right?
Yes.
But
Oh, okay, full settlement. Forgot to put the discount in. Discount allowed. Expense increase. There we go. So we're going to show they received 2,200. And that was in full settlement of his account of 2,400. So this would be another minus 200, and then if discount allowed goes up, this is going to go down. There we go. That's what you would record. Okay, sorry, I didn't look at the figures correctly. It's 2.2 and it's 2.4. There is a discount. Okay. Number 7. Purchase inventory on credit. If you're buying inventory on credit, your liability will be affected positively. So creditors, North, liability increase. They received a trade discount. Remember, trade discounts are taken off and left off. You don't show the trade discount. Selling price was that prior to the discount. I'm buying what? Stock. So purchases will go up. Creditors is a liability. Liability going up, so plus. Okay, we're going to need to do a working here.
you calculate the discount, but you don't show it.
Correct. Yeah, you take off the discount, but you don't show it. So it's 20700 and minus here 20700, because this was the 23,000 minus 23,000 times 10%. Is that okay? Great. Next, 14. The account of H, a debtor for 4/6, is already 3 months in arrears. Interest at 12% per annum must be charged on the arrears account. Right, so if you're charging your debtor interest, what happens to your debtor? Up or down? Goes up. Debtors increase on the debit. Why are they increasing? Because you're charging them interest.
If you write interest fees, that's fine.
Interest? Fee, no. It must be interest income or interest received. Income would be the better option. Okay, 4/6 times 12% times. How many months was this outstanding? 3 months. 3 over 12. Okay, so 4/6 times 12% times 3 over 12 gives me 138. This goes up. Interest goes up. Happy with that? Questions? Okay. 19. Inventory purchased from BA was incorrectly posted to the repairs account. Right, so what do you need to do? You need to take out the repairs and process the inventory. Do you agree? Okay, so how do I take out repairs? Debit or credit? Correct. Right, repairs will decrease because you're not supposed to have them. Expense decrease, and inventory is what you purchased, which is purchases. Expense increase. Right, so the repairs will go down by 1,950. So repairs will decrease. So that'll be a plus. It'll increase owner's equity, 1950. And you'll have purchases, which is a decrease. So plus minus there. Makes sense. Yes or no?
It does. I just want you to explain this capital and income increases, it will affect equity, drawing and expenses decrease affect equity.
Okay, yes. Okay, so capital increases leads to an increase in owner's equity. Correct, equity. Let's just write equity down.
I just want you to kind of like,
Explain why.
I'm actually lost with this term.
What term?
Capital increases leads to increase in equity.
Yes.
Could there be a capital decrease?
Yes.
Okay.
But if it's a capital decrease, that means you're actually taking from the business, which is drawings, not capital. Changes what it is.
Okay.
Okay, so income and capital will increase owner's equity. And then drawings and expenses will decrease owner's equity. If drawings had to go up, would the owner be entitled to more or less? Less, exactly. Right, so what we have here, we actually covered in the first bit. We covered that in chapter 4. This one. Let me show you. No, not there. Here's it. Okay, so in your notes you had an equation that looks like this. Owner's equity equals capital plus minus the profit or loss minus the drawings. We know profit is calculated by looking at income minus expenses. Okay, that's the equation for owner's equity. That's one equation for owner's equity. The other is assets minus liabilities. There's two equations for owner's equity. This is the one that uses your nominal accounts, okay, being your income and your expenses. And you're considering capital and drawings as well. So now if I look at this, capital and income. If I increase income, what happens to profit? If I increase income, will I have more profit or less profit? I'll have more profit. And if I have more profit, will I have more or less owner's equity? I'll have more owner's equity. Does that make sense? Okay. Capital. If we give the business more capital, will the owner have more or less? Exactly. Right, and that's why you've got that. Capital increases, income increases, leads to an increase in equity. Okay. If I look at the opposite, expenses. If expenses increase, what happens to profit? It decreases. If profit decreases, what happens to owner's equity? It decreases. Okay, so more expenses lead to lower profit, leads to less owner's equity. Okay, same thing here with drawings. If drawings goes up, what happens to owner's equity? Well, if drawings goes up, you'll subtract a bigger amount. If you're subtracting a bigger amount, you're making owner's equity smaller. Does that make sense? Okay, and that's why you've got that. That's what you study. Okay, you know the 6 different accounting elements? These are 4 of them. These 4 will affect owner's equity. Got that? Better? Okay. Alright, so 19, are you happy with 19?
Yeah.
Okay. 22. A debtor, Donald, was declared insolvent and his account of 8.5 must be written off. Donald is a debtor. How do you reduce a debtor's account? Debit or credit? Credit. Do you agree? Okay, so if I'm crediting a debtor's account, I'm going to do that, right? Obviously, we need to change the name. And why am I debiting or crediting their account? It's because I'm debiting the credit losses or bad debt. Bad debts, credit losses is an expense that's increasing. Expenses increase, owner's equity decreases. So I'm going to have an amount here of 8.5. Debtors decrease, 8.5, and there's another transaction recorded. Happy with that? Okay. All right, the last one was 27. So let's look at that one. 27. Received a check from R. His debt was written off as irrecoverable during July. Do you reinstate a debt that you wrote off? No, you can't. Debtors only get created when they buy from you on credit. You can't create a debtor if no one exists. Right, the only time you'll have a debtor is if someone buys from your business. So this would be treated as bad debts recovered. That's a separate transaction because it arises separate from the actual sale. Okay, selling to your debtors. So bad debts recovered is an income. It's increasing. What's happening here? You're receiving a check. Checks increase the bank. Bank goes up plus 16,750. Bad debts recovered is an income plus 16,750. There's another question complete. This question was supposed to take us 29 minutes. It's 24 marks. It took us 16 minutes. Is that okay? All right, so questions. You guys wanted me to do this one specifically because you guys are preparing for your exam in 2 weeks' time. So what went wrong? What are the problem areas? Did you see what the mistakes were? Did we learn from those mistakes? Okay, because what I actually want to do is after I've done these two questions with you, this this accounting equation and then the ratios, then we'll find two where you guys can actually do it, and then we can discuss what you did to see, well, did this help in any way? Okay, so we'll practice that just now. It won't take that long. It's good to practice as well. Okay, happy with this one? Any other specific questions?
When it says periodic inventory system,
Yes?
we need to know that when they refer to inventory, they're referring to purchases.
Correct. Okay, so why do we do that? Let's go back to the notes. Let me show you where we covered that. That would have been probably 9 and 10.
And then the other one,
Yeah, there's inventory. Okay, so with inventory, you get two types of inventory. Did I write it down here? Yes, I did. There's it. Perpetual, cost of sales is applicable. Periodic, no cost of sales. With periodic, you need to actually calculate cost of sales, and then you have to use that equation. Where's that equation? It might have been in a separate chapter, chapter 7. Oh, that was cash flow, that was receivables, then maybe 6. Double entry, counting process, processing. Yeah, no, I'm sure we discussed it here. We wrote notes on this set of slides. Okay, maybe I can add more to this. Oh, there's it. Here you go. Cost of sales. It is there. There's the equation. Okay, you've got the cost of sales equation. What is this applicable to? The periodic inventory management system. Okay, maybe I should add something there. Periodic. Right, so this is what you would be using when dealing with the periodic system. You need to calculate cost of sales. Right, with periodic, let's write that down on this slide. Where's the other one? This one. Okay, so periodic purchases inventory. Okay, so that's what we need. That's the key. That's what you need to learn. Right, so with perpetual, maybe let's do it this way, perpetual and periodic. Right, so if I've got periodic, I deal with purchases. If I've got perpetual, I deal with inventory. Inventory is an asset, purchases is a expense. We'll save that. Does it make sense? Does that revision help a bit? Okay, remember we're trying to revise, we're trying to do questions, we're trying to prepare for that actual exam. Happy? Okay, great. Right, let's close that, we don't need it. Let's go back to the past paper. The next question you guys wanted me to do is this one. Question 4, 15 marks, 18 minutes. We were looking at this, ratios. Okay, ratios are easy to do. You just need to study the one page in the study guide. Right, so here's the study guide. It was on page 263, I think, right? 263 is on this page. There's it. Here's it, 263. Right, so everything that's on this page, you need to commit to memory going into the exam. Right, if you don't have the ratios, you get 0 for this question. If you have the ratios, you get 15%. It's a lot. That could be the difference of passing and failing. Okay, so don't overlook ratios. They do tend to test them. They've tested them here. They tested it in the previous one, the one that we looked at last week. Okay, we did the same thing. We did ratios there. Okay, so I'm going to do the same thing here. What do? I go to the question. I look at what's required. What's the first ratio that they're asking me for? Correct. Trade payables payment period for 3 marks. Okay, so, that was question 3. This is question 4. Okay, trade payables payment period. Question 4. That requires a formula. Go to your formula sheet. Where do you see the trade payables payment period? Over here. So I want this. I write that down in my answer sheet because Eunice is probably going to give you a mark for it, because you would have studied those equations. Okay, so I write down the equation. Leave space. Write down the next equation. What else do they want? Profit margin. Profit margin is that. There's it. Take that, write it down on your answer sheet, leave some space, do the same thing for C. The question asks for solvency ratio. Solvency ratio is assets and liabilities. There's it. You write down that formula in your answer sheet, and that can help you with the actual answers. Okay, D. What else did the question want? Asset test. Asset test is looking at liquidity. Taking out inventory, do we still have sufficient assets to meet our current liabilities? Write down the formula. Go to E. What did E want? Current ratio. Current ratio is easy. It's current assets and current liabilities. A lot of these are quite simple to remember. Some you are going to have to study and remember for the exam. Right, so do you agree I now have all the equations? They tell you that all formulas and calculations must be shown. Answers must be rounded off to 2 decimal places after the comma. Right, so once I've got those equations, all I need to do is go back and look at this stuff, all of the information that they've given me in the actual question. Okay, so when I go to my answer sheet, let's look at the first ratio. What is the ratio asking me for? Average trade payables. Average trade payables. This you need to learn. An average is the start plus the end, divide by 2. Right, so I'm looking for start and end divided by 2 here. Let's go down and let's look for it. Where is it? Where is it? Where is it? Okay, there we go. Long-term borrowings, trade, and other payables. Those are 2 liabilities. Which one do I want? The trade and other payables, the 251. Did they give you opening balances here? No, they didn't. No opening balance. So what are we going to do? We're going to have to use that as the average. Okay, because there is no opening balance. Right, so be careful. Here, there's no opening balance. The trade and other payables was 251, 500. Okay, so brackets 251, 500. They did say in the question here that assume all purchases were on credit. Okay, we've only been given one line item here, which was 251, 500, which is your trade and other payables for the year ended 31st of January. Okay, so this wouldn't be divided by 2, it'll be divided by 1, which is just your 251, 500. Credit purchases, they tell you in the question, assume all purchases were on credit. Do you see that? There's it there. So if you're assuming all purchases were on credit, this was all on credit, 320,000. So you're going to have, as a ratio, trade payables, settlement period equals 251, 500 divided by 320 times 365 equals an answer. Sorry, the question was? Straightforward, yeah, because they didn't give you the opening and closing balance, so you wouldn't be able to work out the average. Right, they should have given you opening balances, because then you could add up opening plus closing divided by 2. It wasn't given, so you can't make up a figure. You have to use what you've been given. Okay. Right, so that's A. Does that make sense? Is that alright? Are you okay? Okay. Let's carry on. Let's look at the next one. Okay, I'm going to leave this up because we're probably going to need that. Profit margin. Okay, here's your question. How do I work out profit before tax? Well, did they give you profit before tax here? Do you see a profit before tax here? No. What type of business are we running? Nika traders, right? Does a sole proprietor pay tax? Yes, in their personal capacity. Will the business pay tax? No, it won't. Okay, because the business and the owner are one and the same. It's a sole proprietor. Okay, so this line item, profit for the year, is the profit before tax for a sole proprietor. Okay, so profit margin equals 300, no, not 300, I'm reading the wrong line, 196. Where's it? Here's it. 196,000 over sales. What are my sales? Revenue is another word for sales. 780,000 times 100 equals 25%. There's your profit margin. Okay, next ratio is total assets. Go to your statement of financial position. There's total liabilities, there's total assets. Easy, right? Solvency equals 1218000 divided by 641500 equals yes, 1.90 if you round off to 2 decimal places. Correct. Perfect. D. Asset test. Asset test is your current ratio minus your inventory. There's current assets, there's inventory. I need current liabilities. There's it there. Can you see all of that? Almost. There. Okay, so asset test equals, open brackets, current assets, here's my current assets, here's it there, 518. Less inventory, there's inventory, 230. All divided by, open brackets, current liabilities, there's it there, 251. 500. Close brackets equals 1.14 as a test. Is that right? Okay.
So the inventory, I take the one for the current year that I'm working on, because they have got inventory for 2014.
Yeah, you've got closing and opening.
Okay.
You have to use closing. Yeah, you have to use closing. Right, and then you've got current, which is the same as asset test, except no minusing inventory. 2.06, perfect. You just got 15%. Right, so ratios aren't that bad. You just need to interpret the information correctly. As long as you've got the equations, you guys can all do well in this section. That's why I'm saying, please, 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 make sure you study this before going to your exam. Because chances are you're probably going to get a few of these